Everybody, welcome to the Baggett Investor Channel for a new video, new week, new weekly video. This week I'm a little late. I'm 2 days late. I'm very sorry. I was very busy at the beginning of the week, but so you can forgive me. I will make a very big and detailed video today. So I hope you have some time, take a cup of tea or a cup of coffee, or just listen to me. It will be more interesting to watch the graphs, but you could also just listen to this video because I have many things to talk about. Very interesting things happening into the markets. We might finally be getting out of the range period we had for the last year. So it's very good moment to listen and to maybe start placing your bets. So first we start by my performance. Every single week I show you. You can see that 3 weeks ago I had a huge spike into my performance. That right now I have a small correction into my performance, but I'm managing to keep the big amount of money I made it, and my performance should start spiking again up because I'm placing some bets that are working fine this week. So we're going to see at the end of the video which bets did I place this week, which bets I'm going to put more onto them. And right now we're getting to the broad market technical analysis. So I'm going to start by the S&P 500 because that's the most interesting thing. So we had what we call a failed bearish signal that many people see. People thought that, and included me, that this was the start of a bearish signal. So this is the signal to be very careful when you have these kind of signals, that a huge red candle spike. You start to be careful, you reduce your positions, you put yourself into a short state of mind. But what we had just the next week, so just last week, we had what we call a bullish engulfing, which means it's when a candle opens and eats all the downtrend again and closes with a lot of strength and not any wick, which means that the market is staying very bullish at the moment. What can happen? Can be anything. It has no predictable value. We're not predicting the future. We are acting according to the market inflows. If we see money entering the market, we want to be on the long side. If we see money exiting the market, we want to be on the short side. And if we see money doing nothing, we want to do nothing also. What's happening right now is that the market is kind of doing nothing. It's ranging on the global scale. This is the S&P 500. This is a packaging of 500 companies put together. There are some asset classes that are trending, some that are trending up, some that are trending down, and I'm going to bring them to you right now. The first thing that you need to understand is the difference between growth stocks and value stocks. It's very important in these periods of time. What's a growth stock? For example, DocuSign, which is a company that you probably have heard about during the COVID period, is a growth stock. It's a company that is growing at a substantial rate, but you can see it's constantly losing money. This is a company that will be labeled as growth stock. What is a value stock? You would call, I don't know, JP Morgan. You could tell that a value stock. It's a very established company for maybe 100 for a century. So these stocks are completely different values. The question you would ask is Google, Apple, and all these things kind of value stocks or kind of growth stocks? I don't know the answer in that question. Because they're in the NASDAQ, I would label them as growth stocks. We're going to look at the NASDAQ. And what the NASDAQ is telling is that it's much weaker than the other indexes that I'm going to show you. Back in the days, the NASDAQ used to be the strongest indexes, and now it's a little bit lagging behind. When many indexes in the world are over here, the NASDAQ is really over here, down here. So unless the spike in NASDAQ and in growth stocks is going through the roof, there is a clear outperformance by value stocks. So you can take a look at the S&P 500, only value stocks. You can see that it's holding the bear market very well. There's no bear market on this index. It's a range market. Whereas if you look at the SPY growth, the S&P 500 growth, you can see that there is a slight show of a bear market. Of course, there has been a bull market, but what's happening is the influx of capital right now. You can see that right now there is money was flowing out. And if we don't start to reclaim the highs, we start to make new highs, this is going to be the start maybe of a bear market or a range market. So the strongest asset class is the one that corrects the less, and what we're seeing right now is that value stocks are the one who correct the less. We can also spread that out by each and every one of the asset class. So you have small caps value that look like this, and you have small cap growth that looks like this. You can see a clear difference with small cap growth looking that they are in a strong bear market, and small cap value who are in a range market and trying to make a new impulsion right there that is for now very weak, but still much better than growth small caps. It's the same thing for growth mid caps, but it's much more interesting to just look at small and big caps to give you a fast and broad idea. So in that context of value stocks being the stock to be interested in, countries that have the most value stocks in their national index will perform the best. The MSCI indexes, or for example, the S&P 500, are loaded into the companies that make the local economy of the country. So the S&P 500, which is loaded a lot in value stocks, will not be as interesting as other countries. So that's why in my trading list, I added the Canadian index, which is the S&P TSX being the Toronto Stock Exchange. And you can see the difference between the Canadian stock market, and I'm going to display the American stock market just right there. So you can see in the past, it used to perform much better, but right now we're starting to see a clear shift into the behavior of both of these indexes. You can see right now we have a strong leg down right there, whereas right there on this index, nothing's happening and it's moving up. You might be asking, it's the currency. Well, we are going to convert all of these charts in the same currency, the US dollar, and you can see that the same behavior happens. So it's not due to the Canadian currency being devalued, it's due to the market pushing higher and higher. And you can see that if we take the low of the COVID crash, the bull market is very, very, very similar for all this period, but right now we're starting to see some decoupling. So will that stay? I don't know. It's just a signal that maybe Canada should be where to look at. You could even look at, I'm going to remove this, could even look at something more precise, which are Canadian small caps. You can see that it's also trending up, whereas if you look at American small caps, it's trending down. And another country that is very interesting is Australia, which is a little weaker, but I'm more interested in Australia to these small companies. So this is the emerging companies from Australia that I'm going to convert into US dollar right now. So you can see the price in US dollar, and you can see that this asset class compared to American stocks is looking much, much stronger. We have not had any bear market strong corrections, so that's a sign of very, very hard strength. And it has nothing to do with their countries. It has to do with the sectors that compose these indexes. You have the mining sector being one of the strongest sector out there. This is the S&P Metals and Mining, combining stocks from mostly the US, but there are all stocks that are worldwide. So you can see that we are having a massive, massive influx of capital. There was a lot of money that came into mining stocks. You can see the copper mining industry. You can see steel stocks being very strong. I failed to enter on steel, but look at what steel happened. It retested this decade-old support level, and now it's starting a new bull market. You compare that to the Nasdaq, to the QQQ, and you see that there is a complete different approach to this. XOP, which is the oil and gas exploring product, same thing. A lot of Canadian stocks are linked to oil. Canada is a big oil producer, and that's something you really should be looking at. There are some sectors that are very, very bad. For example, many people know about the ARK Innovation Fund that is composed of disruptive, new, innovative, but not money-making companies. And these kind of companies are not trending at all right now. They are trending down. Investors are dumping their shares. They're selling, and now they have already sold a lot because the index is in fact down 67% since the highs. So if you bought the top, well, I'm very sorry for you. But right now, this is not the time to be interested into growth stocks at all. In the next weeks, there might be signs that the times were changing. But right now, there is really something going on with value stocks. Everything I told you. Value stocks go up because commodity prices go up. When an oil company gets more profitable, it's thanks to the price of oil increasing. There is no other way for the company to be more profitable instead of the rise in productivity, but that will not make the price of the share rise as much as when oil prices spike up. So we're going to take a look at commodity prices. I have the price of oil right there. That is an interesting thing happening. So we're going to remove this. You can see that on the weekly, we are still in a very strong uptrend. The red line right there is the start of the Ukraine war. So just you have an idea of what impact it had. We had a lot of volatility over the past few days. We had a huge spike up, then a huge spike down. I loaded on gas for my car right there because I was afraid that the price was going to appreciate more and more. And it looks like oil prices will not stop moving up. You need to take that into account for your daily life as an inflation metric, but also for oil and gas companies that will continue their appreciation as the price of oil go up. Their valuation go up because they just make more and more and more money. You have other things like in terms of energy, you have a uranium price. So you're going to look at the uranium futures. So it's the only metric we have. You can see that uranium futures are going up very strong. I will do a special video about that. If you're interested into uranium, you will be interested into this. So I'll publish maybe that in the evening or tomorrow morning. Energy commodities are really trending right now. There is another asset class that is agricultural commodities that you can find the index, which is DBA. I called DBA somewhere around there and somewhere around there. So I've been talking about agricultural commodities for a long time. I own corn, soy, and I don't own wheat. But we're going to go into my commodity list. So I believe it's somewhere around there, right there. Let's look at wheat. So ZW is the wheat futures. You can see that wheat is in a massive spike. Corn is also in a massive spike, but starting back its bull market. We are now clearing the previous all-time high from May 21. So you can see corn is starting over its bull trend. And it's the same thing for soy. Soy prices cleared their previous May 21 high, and are now in a new bull market. So pay real attention to agricultural commodities. Pay real attention to agricultural companies related to agricultural commodities. For example, wheat companies that exploit and sell wheat, companies that manufacture all the things needed for agricultural markets. That might be something very interesting. And if we look at what I believe is DB, what is DB? I don't remember. It's let me check real quick. Gonna go there. Commodities. Yeah, it's DBB. It's base metals. So this is an index that tracks the price of base metals, and I have them in my commodity list. So we're gonna check them right now. Most metals are in a strong bull market, very strong bull market. So this is the price of tin. This is the price of aluminum. You can see it's in a very strong bullish trend. You can see the price of copper. That if you look at it on the weekly, I'm long copper right there. Unfortunately, the breakout failed, but I'm waiting for the new signal to come. And if it doesn't come, I'll get out of my position. Zinc is also making new highs when you look at the closed price on the weekly. Nickel has some crazy moves right now. I don't know if you heard about the thing that happened on nickel, but there was a huge short squeeze that led the London Metal Exchange to shut down trading. That was, if you can look it up. I don't have the time to talk about it right now because the video will be too long, but check that out if you're interested. And this is lead. That is the least interesting of the metals. So every kind of commodity is really in a bull market. Energy commodities are in a bull market. Agricultural commodities are in a bull market, and metals are in a bull market. You can trade commodities directly by buying ETFs or futures, or you can trade the commodities indirectly by buying commodity-related companies. If you think that copper price will appreciate, you buy copper mines. If you think lithium price will appreciate, buy lithium companies. Talking about lithium, we can just take a look real quick at the lithium futures to show how crazy the lithium price is going, and I don't think it will stop anytime soon. Last thing about TA, after that we talk about the trades I took and what I'm going to do in what I did last week and what I will do this week. Bonds, 10-year yield for the United States of America is 2.35, which is a lot considering that it was at 0.7 2 years ago. And if you look at interest rates all over the world, I'm going to take my trading list very quick. The German yield is also at the highest since 2018. German yield is at 0.5, we could say. And yields are rising, which means bond prices are going down. We can see the BND index, which is an ETF that tracks the price of the total bond market. And look at that. This is what you call a strong bear market. Bonds are in a very strong bear market. So what's going up is kind of only value stocks and commodities. But that's where I'm showing you to. I think it's the best place to invest. Bonds are really, really not what to buy right now. So talking about where to invest, I'm going to share what I do, because on this channel, this is what I do. I am very proud of owning this company, which is Core Lithium Ltd, which is one of Tesla's lithium provider. I discovered that after I bought it, but it's actually Tesla's lithium provider, because you need lithium to make batteries. And you can see that this stock is gone from 0.46 to 1.23 over the past 3 months that I own it. So very proud of this one. I own also HME, which is a Hemisphere Energy, which is an oil producer that also went from 1 to 156. So very, very good opportunity. I am looking forward to add more in corn ETF, as you see right there. I bought it in 2 times. I bought it here and here, where you can see where my pointer is. And now it keeps going up as it happened last time. You had one opportunity here and there was a beautiful consolidation and you bought a second time here and you made a lot of money. That's the same thing. If the price keeps going up, why not just buy more? My stop loss is already here at 0.22 on this ETF. I keep buying as long as it goes up. I also loaded more on Frontier Lithium, which is another lithium mine that I'm trading on the Toronto Stock Exchange Venture. I own this package of agricultural commodities that is called IGA, listed in London. I own Spot Copper, which is a failed trade for the moment because the breakout failed, but it feels like it wants to start another attempt, so I'm keeping this. Other failed trade is Navios Maritime Partners. I forgot to mention that shipping stocks are very interesting, but they're not as strong as other value stocks such as mining and all. So I think about giving up on this one, which is one of the worst. AVZ Minerals is another lithium stock. You might say, well, you own a lot of lithium stocks. Well, yeah, but they're the one that are interesting, the one going up. So why shouldn't I buy them? I buy what's going up. Soybean is a soy ETF, which allows you to own soy futures without actually owning the soy futures, which is very convenient. CCGA is a very famous uranium mine, so it's a way for me to speculate on uranium. I own CS, which is Capstone Mining Group, which is a 3 billion Canadian dollar copper mine listed in Canada. I own VZLD, which is a gold spot that corrected a lot, but I think it will resume its bull market. I own EL8, which is a uranium mine that is not doing very well at the moment, but I think it will appreciate because I really look at this in a weekly and monthly chart. And the best of the best is Alligator Energy that I will add to. If it keeps going like that, it's very beautiful. I'm thinking about selling EL8 and putting that into AGE because the setup is beautiful. There is immense volume on this one, but I will make a video. There were other stocks that didn't work. I tried to short this one. The short didn't work. NVA, too much volatility, got taken out. Grin got taken out also because of too much volatility. FCX got taken out because of too much volatility. TGA got stopped. So yeah, not all stocks work, but I think right now being exposed to value stocks is very, very interesting. So as I said, I am keeping my eyes to add to my corn ETF, and I also keep my eyes on lithium stocks. You can see that I had the opportunity to buy this one by setting a limit here. Unfortunately, the price spiked, so my limit was not executed, and the stock is taking off without me, but that's not a problem because it's one of the most beautiful lithium mines, so I'm still looking at the chart and will buy it if the occasion presents itself. I'm really interested with Allchem Limited, which is another lithium mine. Yes, I talk a lot about lithium, but lithium is really gorgeous at the moment. Virginia Energy is another uranium stock that I will talk about in the uranium video. And there are other stocks that are related to oil, for example, Perpetual Energy, PMT, which is an oil mine that the kind of stock you buy and don't set a stop loss, buy $500 of it and forget about it. PRQ, which is a very beautiful looking small company that produces oil. Birchcliff Energy, same thing, produces oil, very beautiful chart. And yeah, there are SBLK2, very beautiful chart. As I say, it's shipping stock, but shipping stocks are not really interesting right now. Maybe in the next weeks there will be a strong leg up, but this week's they are not really interesting. So I still have my alerts set, but I am not right now very interested in them. That said, there were a lot of things to talk about this week. I hope my performance will start to drive and get to the 5% profit this year. This will be very, very cool. I count on lithium and uranium to give me some nice profits this year. So that's it. Follow the next reviews, subscribe, leave a like. Thank you for watching. Goodbye. Have a nice week.